Every time I hear someone say that AP is not that difficult, I see stars. It's a lot more complicated than you might think. I'm going to go through all the steps that are involved, but first, a call out to Naveen Kumar, whose name I hope I pronounced correctly, for requesting this topic. It was a great suggestion. Hey guys, I'm Mary Schaefer, founder of AP Now, the place where we share all the latest business intelligence for those who work in, manage, or have responsibility for the accounts payment or payment functions. So let's dive right in and get started. Now, step one, when you're setting up a new relationship where you're going to pay an invoice, ideally, before anything happens, is you set up the vendor in the master vendor file and you get all the required documentation that you need to certify and verify that the vendor is who they say they are. Now, that's in Mary's ideal world. In the real world, as most of you listening to this probably know, that really doesn't happen at this point. It happens, but a little later on. But anyway, okay, the next thing that happens is a purchase order is created and sent over to the vendor, basically to place the order. Most of the time, and then ideally, the purchase order is also given to the accounts payable group, but since most of them are electronic today, they just have access to the same system, and it's not the big deal that it once was. So you create the purchase order and you send it over. Hopefully all the fields are filled out, and if there are any special terms and conditions associated with this particular order, they are put on that purchase order. Now, unfortunately, we know from experience that many times when purchasing does negotiate some sort of a special deal, they forget to put it on the purchase order, and sometimes that wonderful negotiation that they did goes out the window. But okay, they put it on the purchase order. The vendor, the supplier, receives the purchase order, they fulfill the order, and they deliver the goods to your receiving dock. When the goods come in, the receiving department should be checking the packing document to make sure that everything that's on the packing slip is actually delivered and that nothing's broken, etc., etc. How good or bad this receiving function is varies from company to company, but that's what's supposed to happen. And then the invoice is created and sent. And of course, in today's environment, it's often sent electronically, either by email or through some sort of a portal or invoice automation system. When the invoice is sent to accounts payable, and it can be sent either by mail, email, through a portal, or fax today, the accounts payable department receives that invoice and sends it out to the appropriate person for approval. Typically, it's someone in purchasing, and they're able to tell that from purchase order number or the name of the requisitioner, assuming they are on the invoice. If they are not on the invoice, and we know from experience that sometimes they're not, ideally the invoice should be sent back rather than the person in accounts payable or somebody in accounts payable trying to go around and figure out who actually ordered it. Once the invoice is sent out for approval and that approval is received, accounts payable can begin processing that invoice. Now, you might be sitting there thinking, well, if it's approved, why don't they just go ahead and pay it? But it's not that simple. Frequently in the business world today, the people who approve don't look at what they're approving, they just approve. And they may know, for example, that they ordered widgets, but they don't take the time to go back and see, is this invoice for 100 widgets as they ordered, or is it for 120, which was more than they ordered? And is it for green widgets and not blue widgets? And, is it for $1.25, not $1.35, all that, etc. For the most part, many who are approving don't do that. When that invoice gets back to accounts payable will do what they call the three-way match. They'll match that invoice against the purchase order, against the receiving document, to make sure that they got what they ordered, not more, not less. And if they got less, then they want to make sure that the lower amount is reflected on the invoice. So for example, if you ordered 100 widgets and the supplier only had 50, then they should only invoice you for 50. And that's also what should be on the packing slip, the receiving document. Too often, if the purchase order originally was for 100, only 50 were received, and nobody in receiving checked, and it looked like it was 100, then they just waived it in. And then when the invoice shows up for 100, the company will go ahead and pay for 100, and nobody will be the wiser. And of course, the vendor will be happy. Now, you might think that they're done, but we're only about halfway through the process. And before we get to the rest of the stuff that you do after you do the three-way match, I'd like to invite you to hit that subscribe button. It's free, completely private. You can unsubscribe at any point. If you happen to be watching this on YouTube, you can subscribe with a Gmail account, and you can hit that notify button, that little bell, which will notify you whenever we post new content, which we do 3 times a week. Tuesdays and Thursdays, we post about accounts payable and payments issues, and occasionally a career issue like we're going to have later this week. And on Saturdays, we post about my newest obsession, Wordle. We've got a fun Wordle one coming up. Okay. So enough about that. So we get to the point, the invoice has been processed, the three-way match is done, and if it matches, if all 3 documents match, then it is scheduled for payment. If they don't match, and frequently they don't, and depending upon your organization, the mismatches or the discrepancies, as I like to call them, can be anywhere from 25 to 50% of the invoices. In those cases, the discrepancies must be resolved. Now, this is an issue, a problem I take a lot of umbrance with, if you will. Most of the time, the person responsible for resolving that discrepancy is the accounts payable processor who's handling the invoice. The problem that I have with it is that of all the parties are involved, purchasing, the supplier, and accounts payable, the person with the least amount of information and the least amount of knowledge about the transaction is the accounts payable person. Their extent of the knowledge usually in the transaction is that the documents don't match, but they are tasked usually with resolving the discrepancy. And we like to say that ideally, in an ideal world, these discrepancies should be resolved before the payment date so that the invoice can be paid on time. If it's not, then this leads to additional problems, and many times the vendor will send a second invoice, duplicate payments, yada, yada, yada. Okay. So hopefully they get the discrepancy resolved and we can move on, and the item, the invoice, when everything matches, when everybody agrees, can be scheduled for payment and payment made. Now, that's not quite as easy as I'm making it sound. As I talk about this as though it's one easy step, but in an ideal world, it would be. If you're a U.S. company, you're still probably making a lot of payments with paper checks, and they are a real pain. There are a lot of problems involved, paper checks, a lot more steps. We've had some other videos and some other podcasts on them, which we'll reference below. But anyway, you have additional steps with paper checks. Okay, but assuming once the payment's made, you're still not done. You may be thinking, oh my. Afterwards, after all the payments are made, you need to do your bank recs to see what payments are outstanding. If you're making 100% electronic checks, this is not going to be much of an issue. But if you're paying with paper checks, you'll have checks that have not been cashed. And after a certain point in time, you need to research what's going on, why those checks weren't cashed, because as you know, the states consider uncashed checks as unclaimed property. So you really need to figure out what's going on, because you're going to have to pay that money one way or another, and you may as well pay it to the vendor rather than turn it over to the state. You should also be doing some sort of duplicate payment auditing. Now, yeah, ideally this would be done before the fact, and many of you probably have routines in place where you do some duplicate payment checking and verification beforehand, but afterwards you want to go back and you want to do that research, even if you just do some statement audits to find any money that could still be owed to your company. So afterwards, you got your bank recs, you want to audit again for duplicate payments, and you want to resolve any uncashed checks. Just one more reason to pay with ACH and not paper checks, just saying. Okay, so if you are still using paper checks, you probably know that they create a lot of problems and are a lot more expensive than they might appear on face value. We've done 2 broadcasts on these issues recently. You might want to watch them now. There are links to them below in the show notes, and on YouTube, momentarily, links should appear to them. As always, we greatly appreciate your thumbs up, your shares, your comments, and your subscribe.